Hi, Forex Street. Hi, guys, and everyone who is today with me. I will show you some nice tips how I do Camarilla Naked and how I do usually this trend trading. So this webinar will be mostly about Camarilla. You know that, guys, I trade with Camarilla, and for all of you who are following me, you know that I'm not just an analyst. I'm also a full-time trader, and I always try to trade whatever market throws at me. Of course, if situation is in markets is good, if markets are not very, very volatile, I like to do trades on intraday basis, and most of the time, like 80% of the time, they're very, very successful. But guys, it doesn't matter because you can always have a successful trades, but if your money management is bad, if your risk management is bad, you won't be earning any money in forex and financial markets. So holy grail in trading is actually money management. So assuming that you know what I'm talking about, and I will be having more webinars on money management subject because it's very, very extremely important. Let's say that assuming that you know what I'm talking about, I want to tell you and I want to share with you how you can use Camarilla with actually with more precision than it's by default, because I know that there is not enough information, of course, on the internet about Camarilla indicator, and it's normal because people think that Camarilla is simply yet another pivot point indicator. In fact, it is a pivot point indicator, but it is not yet another indicator because this is very powerful. And believe me, guys, if it wasn't that powerful, I wouldn't be doing any trading or analysis with it. Yeah, so I'm sticking with Camarillas I've been sticking, let's say 6 to 7 years, and I really enjoy trading and watching markets with Camarillas. So let's cut it to the chase. And before we start, this webinar is, of course, part of Admiral Markets and Forex Street, a joint cooperation. And of course, me being a senior analyst and trader with Admiral Markets, before I start, as always, there is disclaimer explain that online educational materials are developed by Admiral Markets Estonia for a global audience. And have in mind that Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion. And have in mind that this webinar is for informational and educational purposes only. So please read the full risk disclosure and have in mind that trading always involves risk. But everything in life involves risk, right? You never know what can hit you, what can get you. So markets are usually the least responsible for that risk. But, well, everything what you do always has some considerable risk, and that is a perfectly normal thing. So this is me, and have in mind that patience is the key to trading success. Uh, you always need to be patient. You always need to wait markets to come to you. Don't try to chase markets, because if you chase markets, you will never get it. It's like a shadow. Stand still and markets will come to you. Okay, so this is a snapshot from my FX book, and now I will show you a simple trick that I did with markets with August, because August is usually a very, very slow month. And actually, I had a holiday in August, and I didn't do a lot of trading. But I need to admit, guys, it's very hard to conduct trading when you're on holidays. Yet, when you're a full-time trader or professional trader, it's normal that you take a sneak peek at markets and you actually execute one or two trades. I made a couple of trades during my August holidays, and well, you can see that I made some nice profits. I mean, it depends how big the account, and this is pretty much big account. I have Admiral, so this 1.3% in August, actually, it's nice money, right? And I'm showing you just one snapshot of the account. I have 5 different accounts with Admiral, and I hold and I try to trade all of them. And you can see basically that the drawdown for this trading was not big, really. It's only 1.48%. So this is meager. This is very, very low drawdown, and I always try to trade with low risk. You can see my daily income was 0.04%, so it accounts for ROI 1.28, and I actually even I made my profits even higher because yesterday I had a great webinar, of course, session recap where I made some 50 pips on GBP dollar trade. Everything is done by Camarilla. I don't use anything else than my own developed Camarilla MACD method that also uses this Camarilla indicator that I will be talking about today, of course. And a lot of these trades are actually made from naked Camarilla trading. So not just Camarilla MACD, of course, but also naked Camarilla trading. That is also possible when markets are in range. You need to know when markets are ranging, it's possible to trade Camarilla naked. When markets are not ranging, then of course you need to apply Camarillas to trend trading methods, and my own best trend trading method is Camarilla MACD. Okay, so you can see the account curve. You see it's a bit of positive, and now it's even more positive considering that August has passed and now we are in September. So I'm okay with this because when you make money, when you make 1 or 2%, it equals to a return of investment when you put the money in the bank, right? So when money is in the bank, you can hope for 1 or maximum 2% per year. So it depends on how much money you have. So if you trade with $1,000, this is not much money, right? But if you trade with 50 or 100,000, then that's nice money, okay? So you can actually make something out of it. You can buy some few things just from relaxed trading and financial freedom that actually allows you to trade wherever you're from, so you can actually trade from the beach. So let's see how I did these profits. Very, very relaxed, very, very calm during August. So basically, what Camarilla tells us, I will first show you basic principles of Camarilla, and then I will actually explain you how you can trade naked Camarilla. But you need, guys, to know that you can only trade ranging markets. Trending markets with this approach are not okay, so only ranging markets. And for Camarilla MACD, there is a paid system, there is a paid method, and I teach it also on our elitecurrency.com. But of course, because you are Forex Street visitors, we can give you huge discount. And of course, because you are paying for premium webinars, I can send Camarilla indicator, basic Camarilla indicator for free. So you don't need to pay for that. Of course, just send me an email and you will get the indicator for free. Of course, that is the basic indicator. It shows all of these levels. It's not a pro indicator that I have on my charts, but it's basic and it should be enough. And you don't need to pay anything. It is free. It also can show you these levels that I will be talking about. So the first thing that I want to show you is actually, normal. It's H3 and L3. When market opens between H3 and L3, usually it will follow towards H3 or L3. So usually during the night or during the day, when market opens, you will see that 70 to 80% of the time the price is in between these levels here, right? So what can happen is when price approaches these levels, it will reject. Most of the time when it gets towards H3, it will reject towards Camarilla pivot point and L3. So that is most common and the first scenario that happens within Camarilla range. Now, the second scenario is when market opens above H3. So when I say market open, I literally mean when platform midnight time opens up. So if you are trading with Admiral Markets, of course, Admiral Markets uses currently, of course, GMT plus 3. So it is, in my opinion, the best time for calculating the price simply because it corresponds to New York close time, and actually it's very, very, very precise. So when market opens between H3 and H4, what can happen is that market gets at H3, slightly goes below it, and if the market closes above that, okay, then there is usually 60 to 70% of chance that it will go towards H4. Or it can directly go towards H4, and then if it shows a reversal pattern, okay, a reversal candlestick pattern, then it will usually reverse towards H3 again. Next scenario applies when market opens between L3 and L4. Usually when that happens, market will either go above L3 and close below L3. If that happens, market will get to L4, or it will straight go towards L4. If it shows a bullish reversal pattern that is usually coupled with MACD or CCI divergence, market will then probably go again towards L3 level. And scenario 4 tells us that if market opens between H4 and H5 levels, usually it will get either here or there, and then it will test next level of support or resistance. So what it means, if the market open here, it will usually go at H4, watch for reversal patterns, then if it happens, it will reach H5, or the market can get to H5 for the first time and reject towards H4. Remember, market needs always to be in equilibrium. This means that market is not in equilibrium. And usually what happens, if the market is at very strong resistance here, it will reject even towards the Camarilla pivot point. Same applies for L4 and L5. If the market gets here, then it will usually reject towards L5. If it's L5, then it will reject towards L4, very occasionally towards pivot point. So how does it look like on a real chart? And this is how it actually looks on a real chart. You can see these Camarillas that are applied on the chart. So let's use today's market reaction. So you see, guys, this is, okay, 0, midnight platform time, right? So this is where market opened up. Now, if you followed me carefully, you know by now that, or you should know by now that when market gets to daily H3 and it shows the reversal pattern, I talked about this 3 minutes ago, it will usually test daily L3. This is what happened, guys, okay? This is reversal pattern. You see, these are rejections. This is a rounded top, okay? So rounded top with pin bar to the upside tells us that there are sellers. Here, this is M. So when you take this range into account, M bearish, historical sellers, sellers now, and daily H3, watch this. This was a no-brainer trade. And market got here, and then, of course, because it's still uptrend, it rejected from daily L3. Now I'm telling you some nice tricks that you can also apply to your own trading method. So you see how market actually respected these levels. Let's use pound dollar. Yesterday on my webinar, I said that pound dollar should reject from 29.10, and actually it rejected from 29.10. And now compare euro dollar. Let me open again. So euro dollar went to daily H3, and also pound dollar. Let me just correct this chart. Okay, so pound dollar again. So let's see. This is daily H3. This is daily H4. I'm putting now these lines. This is daily H5, and this is daily L3. Okay. So what happened here? Basically, the price opened here, guys. You see, in between daily H4 and daily L3. Watch this. This is where the price opened up. Okay, so let's see here, 0, 0. So actually, we can say in between daily H4 and daily H5. So here, what happened? Price dropped. You see how it dropped? At the first time, it was a rejection. You see? And then it closed below daily H4. What did I say? When price closes above daily H4, it should go to daily H3. And that is what happened. Now I didn't cherry pick this. We can go like this whole day and you will always see same results. So let's see this one. So platform time, 0, 0 here. The price actually opened up between W, this is weekly level, and L4. And actually this is between daily L4 and daily L3. And what happened then? A rejection. Watch this, guys. Rejection from daily L4 to daily H3. And then when price closed below daily L4, it tested daily L5. You see how this is very, very strong. Now, ask yourself, why doesn't the price reject? Why isn't it rejecting, or not rejecting? Why isn't it breaking through below daily L5? Because this is the strongest daily support. Now you see how the price rejected from daily L5 to daily L4, from daily L5 to daily L4. Okay? So this is yet another appliance of this great indicator. And we have the third appliance of this indicator. Like how actually floor traders did. They followed this algorithm. So what does it tell us? Okay, what does it tell us? I will show you right away. So let's assume this line here is actually 0, 0 line. And it's midnight. So whenever price opens at midnight, you don't need to follow the pattern that I showed. You can actually go with floor trading. And this is how it was. When the price gets to daily H3, okay, you open a short position. If the price gets to daily H4, you see, first short, second short, third short. So actually there are 5 possible short trades from this point to this point. Now, how do you trade it? And there is a stop loss, okay, for short trades. So let's say that your overall risk is 2% per trade. So if your overall risk is 2% per trade, you have 5 possible positions for a short trade. You need to divide each single position to have like 0.4% of risk. So your first position will be 0.4%. Second, third, fourth, and fifth position also, guys, 0.4%, because you don't want to get above 2%, because determine that it is maximum risk, right? So if we followed this scenario, we would have opened only one position, that is with 0.5 risk, because the price got to this short trade. But watch this. You can actually opt to TP here if you're a scalper, or you can actually opt to get into a longer trade towards daily L5. So this actually gives us the opportunity to scalp on Camarilla levels, or to try to actually trade these Camarilla levels with this method. So we would open the short trade, and then we ignore these long trades, because we only get into a trade that hits the first. So let's say that our short trade was hit. and it was hit. We don't take long trades. We only take a short trade only once per day. Only once per day. Okay, let's see. For example, I don't know, Euro GBP. Okay, very, very close. You see the price was here. So, but let's say that you open actually a short trade here. Watch what happened. So you do this only once per day, okay? Whatever is hit first. If long trade was hit first instead of this short trade, then you would have traded a long trading opportunity. And I say always try to aim for ranging markets. Usually CAD pairs are ranging, but today we see that actually there is no big range. But let's use this possible trading opportunity. Now, watch this. If you traded this setup, you would have made only profits with scalp trades, right? Because Australian dollar CAD was rejected here. Okay, then you see if you actually, I always put my stop loss if I go with swing 10 pips above this stop loss. So it would have been 99.02, right? So like this. So you see, this trade would have been good with these shorts, 1, 2, 3, 4, 5. If you went with scalping, then only TP1 would have been hit. But watch what happened. 1, 2, 3, 4, 5, then rejection. Every single of these scale in were collected and price rejected. Let's see. I mean, I didn't cherry pick this. I'm just following it now. Now, this trade is, you see, this is where we take profits. One short was collected, second short was collected, third short was collected. Now, when price is in profit, you need to protect your profits because you don't know if this will happen. So once you're in profit, whether it is from the first, the second, or third short, try to protect your profits. It's very important, guys, because obviously we don't know what news will bring us or what will happen with some important risk events, world risk events such as US tension with North Korea or whatever, right? But at least when you're in profit, you protect your profits. So your first entry here, your second entry was here, okay? And you take the first touch. You don't trade subsequent touches. So only the first touch of this is traded. 1, 2, 3. So this is where your trades were executed. And then when you're in profit, you protect your profits. TP1, TP2, or you can hope that the price will go down, but you don't need to hope for anything because once your TP1 or TP is reached, you can take the full amount or you can actually move your stop loss and see if the price will proceed downwards. It's called profit stopping. Let's see Australian dollar, for example. This is not a good example, but still, you see it made some profits because there was cash rate announcement. And here you see how the price actually, it made some initial profits. But we cannot trade news with this. So let's see other examples here. We don't see anything. CAD yen. Let's see CAD yen. Yeah, for this CAD yen, long trade has been reached. So, for example, here you had your first long, then you had your second long initiated, and you would have been in profit, you see? It's always a good thing that you actually follow this ATR. Because if you see that the ATR, 50% of the ATR has been reached, you can opt to take profits. Because usually when I take profits, I also go with some percentage of ATR. For intraday trading, between 50 and 80, 90% of ATR is perfect. So still, you see, if you went here in your trade and here, your first trade would have been like 14 pips in profit, and your second trade would have been like 23 pips in profit. That's not bad. So because you see the ATR is 80, so 40 pips is still fine. Well, for some of you that are not versed to trade these, let's say, minor pairs or pairs that are not majors, and as always is with trading, I advise you to trade on demo account first, and then of course you can switch to real account, but you need to make profits on demo account first. I can share the free indicator with you. The free indicator will not show these levels like long, 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 short, short, and short, but it will show you these daily H3, daily L3, daily L4, and all of these levels. So you can actually just use the half of distance in between daily H3, daily H4, and plot your own levels. Like you see, this is the half distance from daily L4, L3, daily H3, and H5. So just use this half distance. I mean, this is free for you, so just send me an email, and I will share the indicator with you guys for free. So this is everything I had for you today. I think this is pretty much clear. I don't want to make any theory craft, slides. I think it's always best to show a real chart whenever we come to trade, because trading is not showing slides. Trading is actually showing real charts, showing results, showing how price moves, right? And we don't want to make theory craft much more than it's actually needed. So this is everything is clear. I explained everything. If anything is not clear, please tell me and I can repeat it, whatever, guys. But I think that everything is clear. Send me an email. My email is tarantulafx@gmail.com, or you can actually ask Forex Street for my email. I will send you a free Camarilla indicator so you can use it. I see some comments. Armando saying, perfect. Thank you, guys. I think that we are done for the day. If you have any questions, you can also write me an email about questions. And of course, I will reply. Sometimes you might actually need to wait for my reply because I have tons of emails each day. And sometimes I cannot reply during the same day, but most of the time I try to reply during the next 84 hours. So this is Camarilla Naked. This is how floor trading's did. This is how you can apply swings and scalps. Thank you guys for listening to me. As always, watch my webinars on Forex Street and Admiral Markets and my analysis on Admiral Markets and Forex Street. I'm here to help you make money in Forex trading. Thank you guys. Talk to you soon. Cheers. Trade safe.